Hey everybody, welcome to Now Stock Trades. In this video, we're going to go ahead and talk about a stock that I have high conviction in. If you want to learn more about this company, you should watch my first video. In this video, we're going to go ahead and elaborate on the newly released earnings that they recently had a couple months ago regarding ticker symbol B as in boy, O as in octopus, and X as in X-ray. This company is tremendous. It is under the radar and it has tremendous value. And in this video, we're going to go ahead and break it down. So without further ado, even during these inflationary times, this company is delivering some just really off the ball charts future predictions regarding their QT 2023 operating margins. Now, if we were to go ahead and everything that you see in this video was derived from Stock Alerts, our platform where we democratize financial information. So all this data that you saw, that you see and will see in this video has all been taken from Stock Alerts. And we're going to be showing you guys in the bi-monthly meetings how I analyze companies. So as you can see here, I've taken a look and did a very quick screenshot for essentially a quick YouTube video on the revenue, gross profits, EPS, net income, free cash flow, and we're going to be doing an intrinsic value calculation on the company to see where the company stands. And as you can see here, the revenue, again, this is from 2015 to 2022. We're looking at annual. It has been going up, and it has literally just a amazing trajectory and the type of trajectory you're looking for in a company. Likewise, when you go ahead and look at bottom line, they are still in the negative. This company is unfortunately still net income negative. It is unprofitable from these metrics. However, if you were to sweep down here, they recently crossed the profitability marker of free cash flow. So they just became positive free cash flow just recently here. And they, as you can see from 2020, you can see that they started to increase, and now they went literally from a free cash flow, if you go down here, a free cash flow back in 2017 of negative 16 million to now having a free cash flow of 224 million. That's a lot, right? That is a lot. If you look at net income, you're starting to see that they are going from a negative direction to a positive. And these are the companies that I really like to look at because they're under the radar. And a lot of companies that are free cash flow positive and net income positive, they tend to be overvalued. And it's important to obviously assess the business model of a company to see if it's sustainable. And with this company, it is delivering tremendous, really great gross margins and operating margins. In fact, if you look at the gross profit ratio here, which our Stock Alerts calculates for you and gets it and really disperses it in a very easy to read format or an Excel format if you want a more deep dive analysis, you can look here and say, well, hey, Al, this is going down. And if you look at the red line is the slope trajectory. I always like to look at it like almost like a simple moving average. It kind of helps me. If you track this down with the momentum, you're able to see the stock price fundamentally place with the fundamentals, which, people say, oh, fundamentals don't follow stocks. Well, the stock price. Well, they do over time. If you go ahead and look at the gross profit margins, you have to always look at the y-axis here. We went from literally 74% down to 70%. And again, that's not a big drop, right? But it is overstretched, and it seems like it's a big drop. But I want to see if there's any changes within the company, and I do see that they're slowly starting to trickle up their gross profit margins, and they have stated this in their earnings report where they're just going to ramp up their SaaS production. And again, if you want to learn more about the company, if this is the first time you've heard about it, I recommend watching my first video on Box. And if you look at EPS, they said they're going to basically go ahead and make this even better. So we're slowly going to get to the profitability matrix for EPS, which will directly influence the bottom line, which is net income, which we're already starting to see it cross the x-axis, so the zero marker for the x-axis here. Overall, if you look at the stock price, this moving average here that we basically graphed is a great way to kind of determine. It's been really bouncing successfully for the past couple of months off of this line here, right? And overall, if you go ahead and take a look at Box, you can see that in a year it is up 7%. So it's actually outperforming the market and it's doing really well. And over the past 5 years, it's been up 29%. And unfortunately, back then, the story of its fundamentals wasn't as strong as it is now, which is why it's important to do an intrinsic value calculation and actually look at fundamental investing. So without further ado, we're going to go ahead and calculate the value of this company, and we're going to go ahead and use the revenue as the percentage growth because they're still net income negative, but they're tracking along because they're going from a lesser negative number and they're about to cross the zero into a positive. Obviously, if this is going down, I'm going to be like, okay, no, this company is nowhere near, net income positivity. But as you can see, they actually are. They're getting really close. And, you could see here from these numbers, the numbers becoming less negative. That's why I like to graph things to make it easier. We're also going to be taking the 5-year average of free cash flow and the 2-year average of free cash flow. And then we're going to look at the shares outstanding. Now, again, I put the numbers here so we don't waste time, but you can easily find the shares outstanding by going to Brain Machine, which is our leading edge in market analysis utilizing machine learning algorithms in the stock market. And you can go ahead and look it up here by using the shares float symbol, and it gives you the actual shares outstanding. And if you want to know where the source of this information is derived from, it'll take you directly to the Form 10Q. Again, we're giving you guys the power and being able to look at these companies and analyzing them and giving you the independence without having a financial advisor. Okay, so and teaching you exactly like how to look at these things, right? Because they can, our education system doesn't really preface this type of education, which is unfortunate, but that's another story for another day. So before we do the intrinsic value, I do want to just say something here as more of like a teaching lesson. If you look at the free cash flow quarter, again, this is not annual anymore, this is quarter. And I like to look at the quarters to see how are they doing? And I know they're doing good on the net income because that is going in the correct direction. Again, this is from 2018 to 2022, but it's looking quarter over quarter, okay? What's interesting here is I do see the free cash flow going down. I'm like, whoa. Why is it going down? But I also know that every April they report a strong, if you look at all the Aprils of Q1, their Q1 for April is so strong that it's honestly their strongest quarter. And this is important when you want to dissect a company so you can look at momentum, because if you go ahead and graph this here and go on the bottom, I'm sure the stock price reflects, as you can see here. You can see these bumps here. Again, this is the purpose also to using fundamentals and technicals. So if you are a swing trader or if you are a day trader or a long-term investor, we give the best of both worlds here. So I hope it's a good teaching point to show you. Another thing is, I was like, wait a minute, why is this free cash flow going down more than all the rest of these here? And it's very simple. You go ahead and you go to the free cash flow statements, and we're going to go ahead and teach you this. And we want to look at net cash used for investing activities. And this is subtracted from the CapEx. The operation activities is subtracted from the investing activities in terms of CapEx, which will then give you free cash flow. And again, if you don't know that, we'll teach it to you. Don't worry. What we can see here is the reason why it's down a lot is because they just recently started investing a lot. So they're really, really investing in. That's why they're able to make these projections. They're putting a lot of things in place, and they're investing a lot in the company, more than honestly I've seen in such a long time. And we're about to see the fruits of this labor very shortly. But rest assured, if you look at their free cash flow in total, they are doing pretty damn good. So let's go back here. Without further ado, let's calculate the intrinsic value. So what I'm going to do first is I'm going to go ahead and I'm going to look at 2015. And we said this was 216. Well, first let's go ahead and reload it here. And we'll talk about this one later. Okay, so we'll go ahead and do 2015, 216, 2022, 874. And I got this again from the free cash flow from here. I got it literally from here, these highlighted. So I'm just going to pull numbers from there so you guys know what I'm doing. It's not like, I'm pulling numbers out of air. So first thing, we're just going to look at the average cash flow for the 5-year marker. They have around 104 million. And we're going to extend this out to 10 years. So you're going to see the number. You see how this number just came? We saw 2022 to 2032. So we're going 10 years into the future. How cool is that, right? And then we're going to go ahead and divide by the number of outstanding shares, which is 142 mil. Okay, around that. So by doing this, you see a bear case of $20 a bull case of 40, and a base case of 27.95. And if you look at the stock price, and again here, I did not put the stock price in our intrinsic value calculation. All I put was numbers directly from their fundamentals. So you can see how the fundamentals helps you with the stock price. It gives you the actual value of the company, which a lot of people don't do because they don't know, because it's math. And people close that off on their life. They're like, oh, I hate math. Well, don't worry. We do the math for you. Okay. You just got to put in the numbers and know where to look. So now it's trading at $28. I mean, it was at 20. I mean, it was a good day on a Friday, but it was trading at 27.26. So right around this base case here, $27. But again, this is the 5-year average of free cash flow. The reason why I'm kind of like saying, well, hold on. If you look at the last 5 years of free cash flow, could you argue that this was its infancy and now we're starting to get the fruits from its hard-earned labor back here? Well, yeah. So what you can do is you could take the 2-year average of free cash flow, which is basically these two numbers here, okay? And if you look at that, let's just zoom in here. You could see, literally 50 million, 37 million, 31 million, and then all of a sudden you have 180 million, then 224 million. So you can see that the millions are getting bigger. So you could do is you could take the average of these two, which will give you 202, or you could just take 224, but we'll do 202. So once we change this to 202, then you could start seeing that the recession case is 20, the bear is 40, the base is 54, and the bull is 77. So you could see the potential value of this company. However, what I always like to do is, you see this revenue growth here? You can also take this revenue growth, which they don't have a good income growth right now because they're going towards profitability. Remember that graph going upwards? Positive slope, right? But if you could do is you could take 75% of the actual growth of that and you get something around 16.5. I'm going to go ahead and do about 15%. Or better yet, we'll like really go lower, 14%. Like you really want to just you just kind of like always make the company perform lower than what it is. So you can see from a bear, it's 23 and the base is 31. And then from the bull is 43. I believe last time, I forget, I signed a price target around, as of right now what I'm looking at, I would assign a price target of $35. And that'll give me around a 10%. To honestly here, if you look at this is almost a 15 to 10% return, right? So 10 to 15%. And if you look at box, and if you look at year to date, or just a year, you could see that it gave us 24. Let me zoom in here. It gave the oscillations went from negative 10% to positive 23% to negative 13% to 18%, and now we're at 7%. So you could see, you could see here that the market's just trying to find its value, and it's even in all the negativity that we've been having with the stock market, it is still 7% up, right? And it's at $27. So if you were to put the share, now I'm going to put the share price 28, I think was what it was. If you put $28. We could get anywhere between an 11% return to a 15% return based off of these metrics. Now, if they go ahead and start ramping up and then basically give us the numbers that they've been inputting for the past couple of years, then we can expect anywhere between a 43 to 176% return. But again, I'm doing 14%, and I chose this number on purpose because if you go to box and if you look at their quarter-over-quarter revenue growth, you can see it's 14.7%. Right? So you see where I got that number from? So again, I always like to do a lot of little quirks with this intrinsic value, but that only comes with experience and knowing how to basically set values and set price targets for a company. But you may be asking yourself, you might say, well, Al, I mean, I want to go to the moon, right? Again, you should serve around 5 to 10% of your portfolio should be speculative. The others should be actually real producing companies. I know I've talked recently about AMC, and that was more for just helping the AMC community, giving them kind of like this understanding of what the stock market's like and giving them saying, hey, I do see what you're seeing. But the issue with a lot of these, they're not investors, they're speculators, is that they put 100% of their portfolio in one company. In fact, I've heard some people say, hey, you're wasting your time with this company. AMC is the play. Once that's done, then we can move on to another play. I mean, I don't know what idiot started this. I've heard this more than once, and I don't know what idiot started this particular statement. But I only have 0.1%, like less in this AMC and A8 movement. I am so not negatively affected by this, whatever was happening. It was like, oh, you know what? Let's participate in this membership. And let's go ahead. But there's a lot of folks that put their life savings into this. And whenever you look at a company, like for example, for me, I would say this is around this company here. I would say 5 to 10%. You see the goal here. So let's say you have $1 million to invest. That's $100,000 into this company, right? If you put 10%, right? Or let's say you have a lot of other companies you want to invest in. You can put 10, 20,000 here, 30,000. But you don't want to do too many because it's hard to keep track of these, right? So, I'm just giving you guys some ideas of how investing works. You don't put all your eggs in one basket, because if that company goes out, then it's going to take you 5-10 years to get back on your feet, okay? And again, that comes with experience. So I hope that was helpful. But overall, I just wanted to make a comment about that because I saw a recent post comment on one of my videos here, and I do read the comments. So please comment down below what you think, and let me know how you like this analysis. If you want more information regarding our intrinsic value calculation that you see here at alstocktrades.com, you can find more information on our website. And we've been featured on Bloomberg, NASDAQ, Yahoo Finance, and MarketWatch. We are a very successful platform that is continually growing. And I was very honored to tell you that we are slowly moving into this tech world where our group members are not only going to be immersed within our platform, but if they want to take it to the next level, we are incorporating these metaverse-like features where we're able to communicate in a conference room together side by side to increase creativity, where we can all come together, look for stocks, utilizing intrinsic value calculations and everything that we teach to basically spread our knowledge across the stock market so we can become a team. So without further ado, it's a privilege and honor, and I'll see you on the next one.